Yo, who's dying in the background?
My wife. She's been
Oh,
sick.
damn.
She's sick.
Yeah.
What does she have? She has fever or something?
No.
Slight
I think
case
she had
of
the flu.
death.
No, she had the flu, dude. She had basically my when you have kids, you'll realize they're like walking petri dishes. So she's been like helping out my brother-in-law and their kids. So probably caught it from them. So
Oh yeah, my
yeah.
kid was. Yeah, my kid is a walking disease fest. She can, at least for like the first year, it was like that. Now, honestly, she doesn't get sick anymore, which is great because that means I don't get sick. You know,
Dude, the last time I had the flu was in college, 2020. I had type B flu. I got it from someone, and then
you had the bird flu.
I don't. That's what B stands for, bird. I don't know. It's just type B.
I
That's
don't
what the
know.
doc said. And then a week later, I got COVID. So I went from type B flu to it was just an insane 3 weeks.
You did the rounds. You leveled up.
The rounds.
Mm-hmm.
All right, ladies and gentlemen, thank you for being here. We've got a lot
option.
to cover today. Some things have happened in the U.S. equity markets, which always makes me sound smarter than stock market. We had, what's his name? Microsoft have earnings today. We had Google had earnings today. And then we had this little asset that we haven't spent much time talking about on the channel, but because of its run, it deserves to be the background today. It had a little bit of fun. So which one do you want to start with first? Google, Microsoft, or Bitcoin?
I think we got to start with. I think we got to talk Bitcoin, bro. I think I need to say I told you so.
Carlos, it's your. Start it off.
I'm not usually the guy that likes to dunk on people because I want you to participate in this shit. But I'd say the last week has been pretty interesting. A lot of what we talked about, we've now seen the flip side of it. But some of the Tesla story has come around. That's FSD thing. KRIS was their license was stripped. Their permit to operate was stripped. Today, either today or yesterday, Tesla had a nice bounce back from what everybody thought was going to be a flash crash to start the floodgates. And then Bitcoin pumped 12% in a day. I actually did the math incorrectly because I was calculating the market cap at $500 billion, but I was texting you guys and also in our group. I mean, Bitcoin essentially added, say, something like $70 billion. Like, obviously, volume has a lot to do with it, but just based on market cap, added something like $70 billion in 24 hours. And we were comparing that to Palantir. That's essentially double the entire market cap of Palantir in a day. Now, that's not the shit on Palantir, but this goes back to my thesis or the argument that I've been making that there is a ton of money that is waiting to dump into Bitcoin right now. And this is all on just speculation of these ETFs getting approved. There's about 9 of them that are that are still in the pipeline waiting to be approved. Rango was telling me that I think Kathy Wood's ARC has until the 11th of January to get theirs in. And there's a good likelihood that these could all get approved at the same time. Now, say what you want about Bitcoin as an asset, call it a Ponzi scheme, say that it has no utility. The big boys are seeing this as the store of value that they've been looking for. Whereas gold can fluctuate based on supply. The supply of Bitcoin is fixed. And Wall Street and those guys in general love certainty. So they already know what the supply is and they know exactly how the supply is going to be deflated over time. And we've just needed to clear the regulation hurdles and some of the sentiment hurdles. So if this really is them sort of starting to build positions, trying to get in as early as possible, you can only imagine. We were at 19% over the last 5 days. So a 20% jump in a $500-600 billion asset. I mean, could you imagine if Tesla stock jumped 20% in a day? Like, and actually now compare this to a stock. Can you imagine what the news would be if Tesla stock jumped or if Apple jumped 20% in a day? We freak out when Apple moves 5% either way. This is 20% in an asset that's now surpassed Tesla's market cap in the last week, and it's knocking on Berkshire Hathaway's door. So I do like it's funny, some of our back and forth that we've been having on Twitter where you're like, why didn't anybody tell me? And I think
no one told me to invest in this like amazing asset class that just
I thought it was funny. You're like, I'm up 79%, and you literally made like up a fraction of a penny. I can't believe you have so little Bitcoin. But to my point, if you had just bought one Bitcoin at that time, you'd literally be up $18,000. I mean,
that is true.
It takes a while to get $18,000 out of your Palantir. right? And even if you put 25,000, that's a lot. And our argument was you're going to make a 3x in Palantir faster than you'll make a 3x in Bitcoin, right? Because it's like it's such a low market cap. But this goes to my point of like the addressable market, the amount of people that can buy Bitcoin and the amount of money that is waiting to go into Bitcoin dwarfs any other. These risks involved with stocks like CEOs, like earnings, like a PE, like competition. Bitcoin has none of that. And it also trades 24 hours a day across the entire world. So you just have so much more money. Anyway, this to me was just an indication that there is so much freaking money waiting for this thing to finally have the regulatory hurdles gone. And if you think about it, if they did approve the ETFs, so the ETFs will, like Kathy Woods and those people, they'll buy into this as well. But then that also gives the green light to people to go in and purchase it themselves. And people that aren't necessarily want to buy the ETF, they can just actually go and buy and hold the asset. It's going to do well for Robinhood. It's going to do well for Coinbase and all of those players that offer crypto purchases. And that is just nothing to do with their earnings. Just literally having access to this asset class is going to do really well for some of our other financial plays, PayPal. So I think this is a rising tide that's going to lift a lot of freaking boats and retire a lot of people, hopefully myself being one of them. So what say you now? I took the victory lap. I took the victory lap.
No, look, you deserve to. First of all, I mean, if you're, I'm happy if any of us. I'm happy if Enphase goes to 100. I'm happy if whatever Verizon goes to 50. Like, I want all of us to make money. My biggest thing is, again, I've never felt comfortable owning the asset. So at the same time, I could have bought one Bitcoin at 18,000. Palantir was at $6. 6 to 18. There's a 3x right there from Bitcoin. You know, and I feel more comfortable with that. So for me, it's never been about I hate Bitcoin. It's just my comfort level, and that's all it is. But look, it's up, and I like when it's up. Financial media is more exciting. Robinhood has $3 billion of Bitcoin exposure. Riot, Marathon, all those companies were up 20% on the day.
Imagine now if a lot of these companies had take a small portion of their free cash flow and put it into there. Once the market cap sticks to a certain point, you say you get over $1 trillion now. Now it gets really hard to move the market cap, right? No one person's going to be able to really move the market cap. Once you get there and the regulatory hurdles are gone, companies will feel safer putting more and more of their money in there. And actually, Jesse Dow had a great post today about how Bitcoin has actually performed. We talk a lot about when crypto dumps and we talk a lot about when it rises, but overall, just smoothing all of that out, looking at it on like a monthly, it actually is a solidly performing asset. A lot of that is built, is how it's designed, that the deflation is built into it. People can predict that. And so you go, man, like, what are these companies? What'll happen when these companies just start actually putting 1%, 2%, 5%, maybe 10% of their free cash flow into Bitcoin to get that steady return? It's almost like a guaranteed dividend without paying a dividend. And then you get the ETFs on top of that. I mean, it is, if we saw a 12% jump on the news that one of these spot Bitcoin ETFs will get approved, to Jesse Dow's point, the market, Bitcoin could shoot to $200,000 overnight without the equivalent amount of money dumping in. It's about a volume in the amount of time. Bitcoin could shoot to $150,000, $200,000 very quickly, even if the market cap isn't a multiple of what it is today, just by the volume that's coming in for people just wanting to get in early, right? Or early, considering that they feel like this will be $1 million asset at some point, or where it just becomes in 5 years that you have to have Bitcoin. You just have to have it as part of your assets, right?
Okay, Chris, your thoughts on the Bitcoin explosion?
I think the best way to play this was MSTR, like I was talking about. I mean, yeah, Bitcoin was up, but MSTR, that's been skyrocketing. Did you guys see that?
Well, sure. Those are, that's a, what do you call it?
It's up 30% in the past 5 days.
Yeah. Right. I mean, look, it's up 30%, but
the point is, especially if you leverage this with like an options play, this would have probably been one of the most ideal plays that you could have thought, because their options were trading nowhere near what they are today. And at the same time, the asymmetrical reward is way better for something like Leaps on MSTR.
Right, but you have to understand that we still don't have the ETF approval yet. So once the ETF approval comes, I think that's when people say it is now time to actually hold the physical asset, because you know that people are going to be buying ETFs that are trading on this, and they're not pulling their money out. People are looking at
so here's the thing,
a value that people are saying.
So here's the thing: you can't buy options on Bitcoin, okay, which limits your exposure. Well, which makes that your exposure would be the Bitcoin that you own, right? If you think that there's going to be a sudden jump up in Bitcoin valuations, that means that securities that underlying have a ton of Bitcoin on the balance sheet, they're going to go up way more. So if you just literally, it's almost like buying a lotto ticket.
But you
no, but that's what I'm saying.
You can buy.
But that's what I'm trying to. Huh?
You can buy options.
What?
I think you can, because Sam Bankman-Fried played a lot of strategies.
Wait, how do you buy options?
It's more advanced.
You can buy options on Bitcoin. You can short it. You know, the people that you can short it. You can.
Well,
wait,
are you talking about the ETFs, Carlos, or the actual Bitcoin itself?
I mean, I personally don't, but I'm looking here, and yeah, Delta Exchange, Bitcoin options, Deribit. You could buy
like only really advanced institutional. Like I know
it's probably not. Listen, it's probably not as easy. I personally, I don't fuck with options, especially on Bitcoin, because it is so volatile and the price action is thousands of dollars. It's not like a stock moving $10, $15. It's thousands of dollars. So I don't fuck with that. But
no, but
you can buy and do options plays on it. That's one of the things that pushed the stock price at a certain point. When you know that certain options are going to expire, you can look at the contracts and say, well, we got an inflection point coming on this day. A ton of these options, open interest, they're all going to expire on this day. So Bitcoin's got to make a choice which way it's going to go. And that artificially drives the price up. It's the same thing that what happens with Tesla stock. The amount of options against it. Yeah, DEX and VITIS, there's Bitcoin futures. So you can that can increase the volatility on both sides, up or down. So
I'd say it's probably better to do options on something like MSTR. There's liquidity in MSTR. The options market is pretty liquid on there. I'm looking at like the open.
Why are you against holding the asset? I feel like you're looking for a reason to say, I just don't want to buy the asset. I'd rather play a company that owns a lot of Bitcoin.
Okay, let's do the math. Let's do the math. Okay, because the math is what actually is what you have to use when it comes to this. Right now, Bitcoin is worth $33,000, $34,000, right? I go out and I say, let me buy one Bitcoin. I'm risking $33,000 worth of capital to get a potential, if it goes to $100,000, a 3x position, right? So I'm overexposing myself to a huge amount of loss. If let's say something happens to Bitcoin, it goes down to 15, I lose half my position, right? Instead, what I could do is just say, you know what? I'm going to take 5,000 and just buy a long dated call option and an MSTR. If Bitcoin goes to $100,000, like you're saying, within a couple of years because of some asymmetrical return from the pricing, MSTR's market cap is going to skyrocket because the valuation tracks Bitcoin pretty routinely, right? There is some moral discount, but the risk that you're going to be putting on is only 5,000. So if 2 years goes by and MSTR doesn't hit your strike price, all you really did was lose 5,000. Right. But the potential gain, but what I'm saying is potential gain, but the potential gain for MSTR is magnified. And then on top of it, you're going to get magnified versus you're going to get a magnified return on that call option. So you're not going to be leveraging yourself that much compared to if you just buy the Bitcoin. Yeah, there will be some duration, but if you think that Bitcoin is going to get, but what I'm saying is if you think, go ahead.
I'm just saying the argument you're making is an argument for of options versus holding the underlying asset. It doesn't mean you can say that about any stock.
Or no, Carl, I interpreted that as let me not risk 30,000, let me risk 5,000, let me still get a 4 or 5 crazy X and have zero risk to losing 30,000.
That's an argument to purchase options versus buying the security.
It's just about making money. All of us consider about making money, right? At the end of the
day, I get it. What I'm saying is, I know, but my question is specifically why not hold Bitcoin as an asset? And you're telling me why purchasing options limits your outlying of cash.
No. What you're doing is you're saying that there's going to be an asymmetrical move in Bitcoin because of this ETF inclusion, right? You're saying that, hey, Bitcoin could really,
but you're throwing out the number of $100,000. I mean, I'm telling you, it could very quickly go to over $200,000.
But if that happens, MicroStrategy is going to explode. That's the point.
Oh, right. Yes, but MicroStrategy is still a company that is subjected to the company forces.
But if the underlying asset is with MicroStrategy, because MicroStrategy is technically
everyone instead of buying the spot Bitcoin ETF should just buy MicroStrategies.
No. I don't think you think everyone should. I'm just saying, like, if you want to
it's
play
weird. You get these things in your head, whether it's Enphase or Bitcoin, and you're like, I'll never buy Enphase, and here's why Enphase sucks ass. And I don't care. I will not ever buy Bitcoin, so I'm going to tell you to do everything but buy Bitcoin. But it's
just a proxy, Carlos, and you're getting MSCI at a discount.
I know. Listen, I know, but these arguments are more about, or just general arguments of investment strategies, not about why not hold the asset. You want the actual asset. If you could hold the gold, hold hold the gold.
But Carlos, you want the asset to sell it to someone. Like at the end of the day, I feel like we're talking about money, not ideology.
Depending, honestly, depending on how well Bitcoin does, I might not sell all.
That's bullshit. That's bullshit.
No, what I'm saying
when
is,
you see a couple millions in your bank account off Bitcoin, oh, hold on, we have a guest. We gotta get his input real quick.
I would
Who is
sell.
this guy?
Whoa! Yo!
What are you?
Mississippi in the house.
All the
What
way
up, man?
from New Orleans. Look at that professional $500,000 camera. Oh my goodness.
No, actually, we shoot these now on A7S3s. These are
Those are
amazing little cameras.
$4
They're time
grand, right?
lapse.
4 or 5 grand.
Well, it's rigged out with expensive lenses, but here, did you see that?
So
What
the
are you
Sigma,
shooting,
Are you shooting right now, V? Are you doing a scene?
Time lapse, right?
I'm doing a time lapse. It's not a scene. We already did all the scenes, so this is just a time lapse.
Not bad. Yo,
Sunset.
tell
Yeah,
Chris
this
why.
is the little town, by the way, Bay St. Louis, in Mississippi. What a pretty little town.
Wait, you're in Mississippi now? You're
That
not
looks
in
like
Louisiana?
what's on in Jersey? That looks like a spot in Jersey, like at the Jersey
Not
Shore.
Jersey.
It looks like
It looks like the Jersey Shore.
or it
Yeah.
looks like Maryland. It looks like Ocean City, Maryland. Actually.
100%, it does.
Right? Doesn't it look like Maryland?
It's nice weather right now. It's great here. You know, standing in a t-shirt. It's amazing.
V, how long do we have you for? Like 10 minutes? You got a dip? Or 5
Yeah, I
minutes?
think I got 5-10 minutes while this goes on.
Tell Chris why it's
the
better
only
to
reason
buy.
the only reason I'm on is because I heard part of this stupid fucking thing about not owning actual assets and owning all
Buying
options on
MicroStrategy
assets.
options instead of buying Bitcoin.
No. Okay, and there's a good reason to do it sometimes. I'm not actually against the strategy. I have options too, you know. But the problem is that if you don't own underlying things, your options can expire worthless because Bitcoin doesn't have to do what it has to do exactly in your time your option's going to be doing it.
That's fair. That's a fair point.
And I'll give you a perfect example. Who knew 2016? Let's say you obviously MicroStrategy is not buying it, but maybe there's a different way to gamble. Who knew 2016 we were going to have a run from $3,000 to $20,000? Like who knew that? Very few people understood that. And then the crash that followed afterwards. So
That's
the
true.
idiots who held all their options, if they had them, would be fucking underwater and lose it all. While the other idiots who held all the actual Bitcoin in 2020 are more than whole. They're 20x'd. Okay?
Or if
That's why you hold.
Right, or if you bought 2-year leaps in January of 2020 and then like the next month or two, COVID.
That's
hit,
a fair point. It goes
everyone
both
gets-
ways. It goes
everyone
both
gets-
ways.
But the
Do not
point,
buy.
the-
For example, I do not buy options on houses. I buy houses. Okay, you do not do that. Bitcoin is like we talked about. It's a piece of property. It's something to hold for 10 years. It is not something to trade in and out of every 10 minutes. Honestly, that's my opinion on it.
well, the thing is, the point that Carlos, I thought you were trying to make is that there's going to be an asymmetric move in Bitcoin sometime soon with the inclusion of Bitcoin into this spot ETF, right? So now the ETFs are approved. So that means that the asset is going to get bid up. So if the underlying asset gets bid up, you really want to hold the company that has that already, you know? So my thing with the options is that you think that there's going to be asymmetrical return. So the best way to do that is by risking a little bit to get a lot, right? So I would get the same amount of return as you, but I would be risking instead of $30,000 per Bitcoin, I'd only be putting 5 and getting the same kind of return. You see what I mean?
I think also to clear this up real quick, both of you have really good points because Chris's argument hinges on Carlos, you being right about this halving and this ETF and Kathy Wood, all this shit coming into Bitcoin. But if like many times all of us are wrong and all that happens and it still doesn't move, right? Then you want to hold the asset. So
the thing I'm saying is,
timing
and
thing,
just to clarify, the thing that I'm saying is we might not see 20,000 again as much as we want to. Just like I don't think we'll ever see 10,000 again. I remember in December of 2020 when it finally crossed that threshold and went on its way up to 20,000 and started its run.
Let me get Vitaly here real quick because I know he has to jet. Vitaly, why do you think it's going back to 20,000? I saw you tweet that today.
Oh, well, I follow. Well, besides following a couple of guys like into the cryptoverse, Bitcoin has a tendency to run, as we saw today. I was actually shocked how much it ran when I saw it. That's why I texted you guys. But it has a tendency to dump as well, 50%. Like that is not something that it is unlikely. That is something very possible that can happen.
But why is it possible now? Like, why now do you think it's possible?
What do you mean? Why is it running right now?
You know
Like,
why?
Because
I'll
aren't
give
the
you a
catalysts
reason.
in line, the
No,
ETF, the halving, all that
I'll
shit?
I'll give you a reason why. Because we've been at this level for a long, long time, and there's people that have been waiting for levels to get out. There's people that maybe don't believe in it anymore, but are
they want
holding
You
out.
think there's people? You think
and
there's
they
people
want
willing to
out.
dump?
So I'll tell you right now, if we touch 40,000, I promise you, you're going to see a massive. You're just going to see a massive a sell off because there's people that are waiting. It needs to hit my numbers, and that's what happens as these.
Imagine you bought Bitcoin at 40 grand. What are you looking to do? You're looking to wait till 80, and you're looking.
If you bought it at the top, or if you bought it as it was coming down 46,000, you go, okay, if it hits 40, I'm out because I don't know that it's going to hit 50, so I'm just going to sell out, and that could be a bunch of institutions or whoever's bag holding that. Like I didn't buy it at those.
It's a good point.
Yeah, but the problem with, like, once
happens.
again, you guys keep talking about options. You're timing something. If me and Carlos did what you said back in 2012, and then 2016, I think we'd be broke. I think if we kept timing options,
we'd have lost everything. Yeah.
But granted, you were there in the very early days. There's a little.
There is ways to gamble on Bitcoin still besides options. There's actual ways to 100x and on different exchanges to 100x the money you input, obviously, to make big gains. And people do it, and they get totally wiped out in Bitcoin. So I'm not saying it's not valuable to buy options, but not to hold the underlying asset is just, it's silly. It's like you don't buy a house, you keep renting. Fine, okay, you think that's a good idea to keep renting? Okay, I disagree. You know what I'm saying?
The other thing,
Vitaly, hold on. I know Vitaly has to jet in a little bit. So before you jet, end phase, quick thoughts. Buying more. How do you feel?
Well, yes, I have been DCAing. In fact, on our Discord, but I'm slow. I'm going slow. The one thing KRIS is right: rates are totally killing solar. Absolutely right. 100% right. Nobody's negotiating or discussing that again. That is true. The thing that he keeps getting wrong is that Enphase is not a solar panel company, which he keeps referring to every time I watch him talk about it. It is not going to be beaten by Chinese manufacturers, and there's a main reason for it, because they're actually a chip manufacturing company. How many chip manufacturing companies in America have you been seen beaten by anybody else? Enphase is actually that. Plus, they have a vertical integration in energy that they're doing, right? With the batteries and all this technology.
What do you expect on earnings on Tuesday?
Hold on. This is not that easy to replicate. It's not that easy to replicate by anybody else. And if it is, it'll take a decade to do it anyway. So I think I'll be okay in the meantime. As far as this earnings, I think it's going to be total shit. We know it's going to be shit because Badri told us in Q2 is going to be total shit. But the one thing
hold
is,
on,
like,
hold on. It already took a haircut off the SolarEdge earnings. Do you think it is going to continue to take a shit?
And keep in mind that
I think I tweeted this. Go ahead.
Keep in mind that Tesla did the same thing. Tesla guided for a shitty Q3, and it did not. It was kind of baked in, or it just didn't. It didn't have the effect. It's almost like people are bored of it now. You know.
Yeah, but things can play out over months and months, so it's not like it has to stay at 220 or 230, whatever.
But I'm saying it's not like Enphase is $180 going into earnings at this point. It shit's like $11-12 billion market cap. I mean, Palantir is almost 3 times the size of Enphase right now.
True.
Think about that.
That is true.
So I want to point out, look, the bear case can always be right in the interim while things are crashing. That's absolutely true. Everybody hated Meta also. It took a whole year for it to play out, to crash all the way to $88. And then it took another year to get back to $300. So these things can take years to play out. I don't disagree. But if we are not buying like high quality things when they are tanking, what are we supposed to be doing then? I don't understand. Even if we have to wait 2-3 years to see the multiples we want, or 5 years even. So I think me and Carlos are on the longer term bandwagon where it's okay if we have to wait, right? We don't love to wait. I'm not saying I love to wait, but I'll wait the time in order to make my multiples. Because first of all, I think, Carlos, you had a good point. I think I saw maybe yesterday. I watched for 10 minutes. I can't buy every single bit of Enphase in one day. So if it goes to $80, it's not like I can put $1 million into Enphase.
Yeah, I'm not Sonny Coates where I can be like,
yeah, I can't do that.
You know?
I can't be like, okay, it's $80. It's the perfect price. I'm going to put $1 million in. It's just not going to happen. Okay. Most people will DCA at $80. They'll buy $5,000, $10,000, $20,000. But you don't understand my position. I think Carlos said this. He wants thousands of shares. I have a certain number of shares, and I'm willing to get way more because I want a trajectory. It's the moon. I want to be out. I don't want to be standing here. No offense, it's beautiful, but I want to stay here on vacation, not because it's a job. So the only way that happens,
your thesis is not broken at all. You just want more shares.
No,
you keep it going.
The thing that broke the current next 2 years absolutely is rates. But Enphase just opened 3 factories. They're expanding in multiple countries. How are you saying that solar is dying? I don't understand. Like, they're actually expanding as we speak in this terrible time to expand. Who gets to win when it's bad? The person who keeps expanding and who can grow because they have money in the bank. You think it's going to be Hoy Miles and Tygo? Tygo's fucked. SolarEdge might be fucked too. I think Enphase will be the last man standing, in my opinion.
Okay, there we go. We got it. This debate will be
thesis.
ongoing for the next 2 years. We'll keep it up.
Yeah.
All right, we're doing Google earnings. Vitaly, you can stay if you're good, or if you got to go, no worries.
I'm gonna go. Thanks, guys.
Thanks for being here, man. Enjoy the director life.
Later.
Bye-bye.
See you later, man.
Okay.
Yeah.
We did Bitcoin. Chris, go ahead. You can respond real quick, and then
Yeah,
we'll do
what the
Google.
fuck?
No, I was just saying.
You have a follow-up point?
No, just the point with the differentiating point between Enphase and Meta is that Enphase was dealing with macro level issues that they have no control over. Meta was dealing with issues around spending too much on the metaverse. So there's a clear difference between the two. So one, internally, the company has control over their investing versus Enphase, which has literally macro impact. So you can't really control that. That's the big difference between Meta and Enphase. Like, there was no way that Enphase can make all the cuts that it's necessary and get back to profitability as quick as Meta does. That's the big difference, asymmetric risk difference between the two.
I'll put this out to you because I hear what you're saying. Yes, they can control the interest rates, but there's other macro forces that are actually tailwinds for them. Like right now, the NEM 2.0, NEM 3.0 thing. Have we talked a little bit about this? Like the difference between this?
So Carlos, like, let's do like a minute max because you did Enphase all of yesterday, and then we'll go to Google. Go ahead.
A minute max. So NEM 2.0 NEM stands for net energy metering, and it's basically how you get paid from the energy companies when you provide them with power. The people in NEM 2.0, like myself, like VITALY, have been grandfathered into a certain pricing structure that when we make a good amount of money on the energy we send back to the grid. California is being a bunch of jerks, and they're changing that process. So the people that get solar after NEM 2.0 expires and we move to NEM 3.0 will be making substantially less money off of the energy that they sell. So at the same time, yes, there's headwinds in terms of the rates. People understand that over the long term, it makes sense to get your solar system now, even if you have to refinance it later, because you want to be grandfathered into that NEM 2.0 thing, which is going to last way longer than high interest rates. So there's a bunch of those headwinds. There's a bunch of those tailwinds. And at the same time, the government incentives are pushing people to make this adoption now, along with high energy prices. So there's a bunch of factors that are coming together, and there's a lot of pent up demand. And I've spoken to a couple of friends over the last couple of days that have said to me, I am going to go try to get a solar system on my house as soon as possible, because I don't want to be out of the game when I don't want to save money on the install and then lose money every month on the energy I'm sending back to the grid. It's basically like they're trying to tax people. So you have to consider that those things are all playing together, pushing and pulling, and there's a lot of tension being built. So I think that the stock's getting spring loaded.
All right. Google, ladies and gentlemen, earnings per share, $1.55, beat by 10 cents, 145. Revenue, $76 billion versus $75 billion expected. YouTube killed it, $7.95 billion versus $7.81. Cloud missed by about 20 million, and this is, I think, the reason for why the stock is down 4% after hours, and traffic acquisition costs came pretty much in line. So cloud was the most disappointing. Cloud revenue came in below estimates at 8.41 billion, growing 22% year over year, which is lower than some of its peers. Microsoft's growing at 27% year over year. Microsoft popped 4% after hours. We'll talk about them in a second, but not horrible numbers. Street didn't like it. Stock's at around 130, down from 140. Chris, is this a good dip, or does the street have it right that in the short term Google has some headwinds coming up?
No, I mean, I did two things. Number one, the numbers were actually quite compelling. They're good numbers.
They were really good
Except,
numbers.
remember, everyone expecting Lizzo. I mean, everyone's expected Beyonce. And believe it or not, Lizzo didn't show up.
Come on, Lizzo, that's what I'm saying. Lizzo did not show up. If you beat a 20,
but her cousin, who's moderately attractive, showed up, in which case everyone's like, God damn it, they're disappointed.
Or maybe you can say that Beyonce showed up, but she wasn't in full makeup.
Pretty much.
By the way, it's now under 130, down 6% after hours.
Now this one definitely does not deserve to be sold off. So tomorrow morning, when everyone wakes up and people really digest the news, everything will come back up. I think Google will have like a nice little V-shaped recovery toward the end of the day. Because like I said,
the numbers 431. That's a great comment. When you make billions and you're punished for millions, that's true.
Yeah. So the key to one of the reasons why Google took a small hit is primarily because of their cloud revenue. Their cloud revenue came under what a lot of people were expecting, especially because Google right now is not necessarily as focused on just growth by any means. They actually want to do it with profitable growth. And with cloud, that's one of the things that they've had. They've had EPS. I mean, they've had cloud now operating at a higher level. So one of the things that they had to do is because a lot of this actually just goes back to Google being the third entrant into this, the third major entrant. AWS and Microsoft have this market share that even though the pie is growing, in order for Google to add substantially to the cloud market, they need to offer something that's a lot more enticing to businesses, so they switch over from the Azures and the AWSs of the world. Now, how does Google do that? Well, one of them is by doing cost optimizations. So right now, Google is using their AI to do cost optimization for their clients, but that also means that there's less utilization revenue that's coming to Google. So they may be expanding out their market share, because that's what's happening. Google right now was still growing. They still grew 22% in cloud, which is a double-digit amount. It's just not the 28% that people were looking for. And on top of it, Microsoft, I don't know how, but they really accelerated their Azure growth this quarter. So right now, Google is doing everything right. Google is improving its margins. It's getting back to its 30% margins, and it slipped all the way down to 20% margins last year. So Google is still growing at a very, very interesting clip. If you look at their EPS was up 45% year over year.
They bought back like 15 billion in shares.
15.8 billion. Yeah. And that buyback program is just going to keep growing. So that's the other thing too. Like from a valuation perspective, even though Microsoft is a great company, doing really well, eventually Google is going to get to valuations that are more in line with Microsoft valuation. So I think right now the better bet in terms of valuation is Google. This dip that we're having is an opportunity to add more if you don't already have it. There's some really good spreads out there, yeah. So I know some of the people in the Patreon are probably like, oh my God, we're dropping down again. I wouldn't worry much. That's one of the reasons why we have a spread, is that the top subsidizes the bottom, right? So
it's like a gay marriage. Do you get it? Because there's a top and there's a bottom? Or did you not understand that?
And there's a spread.
Yo, hold on. I made a joke today about sweatshops this morning. I got to show this. It was 30 seconds. The whole audience was like, Amit, this was actually the best thing you've done in the market open ever. I thought the Squid Game joke was legit, but they were like, nope.
That Squid Game joke was awful. If you were,
I literally thought that Squid Game joke was.
Bury that joke. No, your comments the day that we did the bear and bull for Tesla thing, you were on fire that day. You got
that was a fun one. That was fun, and that's mainly I was spitting out. Yo, honestly, on the market open, a lot of times Finance Junkies helps me just articulate shit on the market open, because I just repeat what KRIS says about Google, I repeat what Carlos says about Twitter.
That's fucked up. Then we deserve a 1/10 share of your revenue
in my market open.
MIT, because it's not MIT is investing. It's MIT.
No, really. Like you guys help me. Like I just repeat everything VITALY says about Enphase, and then I sound really smart because I know about all these companies. Meanwhile, the night before, you guys stuffed all this information. I'm good at retaining this shit.
Right. Well, now you're letting everyone on your secret sauce.
On my secret. And then the other part of the secret sauce is these phenomenal jokes, ladies and gentlemen. Here we go. This was on the market open today. I bought some clothes off Shein the other day. I mean, not the other day, like last year. The clothes were not that good, so I didn't go back to it. But like the fact that it was like $2 for like 5 shirts, I was like, shit, I'm gonna get this deal. I don't know how many kids are sweating in a shop to give me these shirts, but I'm sweating to get this deal. No, I'm just kidding. That's a joke. It's a joke. It's a joke. I do not condone child labor. Do not condone it. Even though these iPhones are probably made by children, I do not condone it. But I'm just saying, if they're sweating to make the shirts, as if I buy a sweatshirt and it's cheap, it's just, maybe it's worth the sweat. I'm just saying. I bought some clothes off Shein. Which is, if they're sweating to buy a sweatshirt, you might as well, get the sweat.
We gotta get you on the stage. This is something where it's like your thesis on certain stocks. You believe it. You're really bullish on AMIT right now.
See, some people laughed, bro. They laughed. Okay, Carlos, your quick thoughts on Google. Then we'll move on.
No, I was actually thinking that if Microsoft and Google went on different days, you wouldn't have seen this response.
What do you mean by that?
I think they punished Google because Microsoft did well. So they were like, I'm going to move money from Google to Microsoft.
Interesting. Microsoft popped.
You know what I mean? Like these guys, they don't care about like the money that's coming in and out of Microsoft and Google. It's not retail people. It's people saying, where am I going to get the best return? They don't care. They're indiscriminate. And they were like, well, Microsoft did a little better in this one metric that, you have to understand, like Google missed Wall Street analysts' expectations on one number, but like their models determine what that number was. It's not like Google said, this is what we're, Google didn't say this is what we're guiding for. They just did the best that they could that quarter. And the Wall Street was like, that's like you saying, listen, I took a really hard test and I got an A-. And you're like, an A-, you're punished for a week. It's like, if it was possible to get an A+, then it's I don't know. It's like an Asian family. From what
my joke, my humor's rubbing off on you. Your knowledge on Tesla.
If you're like, I got a B, you're like, well, that's still one more letter for improvement.
Oh my gosh. All right. So Microsoft, we can talk on this quickly, jumped 6%, revenue beat by about 2 billion, earnings per share beat. Cloud growth 27%. For the past 4 quarters, it was negative every quarter. Now it finally is up 17.56 billion. AI, Azure, just incredible. I know we're not really in Microsoft, but is this something we need to consider, even though the market cap's almost double of Google, about 70% higher than Google? No.
I came into a good bit of money. This was like right around, this was right around before Tesla's like first stock split. I probably had like 30 grand and I was looking for a place to park it. I was like, where do I park this money? And I was going back and forth between AT&T and Microsoft. I just wanted a return. I just wanted some safety. This is in 2020. And I was like, Google, Microsoft is so fucking high. I ended up putting it in AT&T. It did okay. I sold it out. But then I looked at what I would have had if I just put it in Microsoft. I have not really found ever a bad time to buy that company as much as it just, because with the buybacks, it's like.
Because Satya Nadella over the past, look at this.
Crush, man.
What he's done.
Steve
Ballmer could never do this, bro. Satya Nadella.
And that's the thing that people forget. Even I forget this, that when you consider like, how am I going to get the return on companies of this massive market cap or even something like Apple? It's the buybacks. They just dump the money back. And that's essentially what happens. That's essentially what happens with Bitcoin. They deflate their own stock and it becomes this new threshold that it will never sink under. And and they pay you a dividend. So it's, these are like what you could arguably like perfect stocks to invest in, like super long term, because they're just crushing on every metric, and you're going to get returns over the long term. You're going to get returns. Look at that chart.
Yeah. Chris, any FOMO on Microsoft, or you're fine with your Google?
No, I'm fine with Google. I think the valuation makes more sense on the Google side than on the Microsoft side of things. Their EPS is growing at a much faster clip. Their cash flows are stronger. So right now, the free cash flow is going much more into share buybacks. It's got 120 billion in cash right now. So no, I think in terms of like capital appreciation, the better value is Google.
Okay,
hands down.
So Carlos got his victory lap in the first 20 minutes. We don't have a full victory lap yet, but Verizon stock had their best day in 15 years, which is pretty interesting. Closed up more than 9% on the day. They had earnings revenue of 33.34 billion.
Wait, that was their best day in 15 years in terms of single day
stock return,
stock movement, right? Okay.
Yeah, because it's never been down this aggressively,
right?
As it's been. They added 20 million subscribers, 21 million, or their total subscribers now are 21 million, which has impacted the company dramatically. They're down on net income a little bit year over year. Some stuff they missed on, but in general, the market was very excited for what Verizon did. Chris, obviously you're raging the horn on this one. What did you see in this thing that gave it the best day in 15 years?
It's the free cash flow. Once you look at the free cash flow, it makes total sense. Like, so can you pull up that tweet by Andrej? Because I think that's one of the things that I really want to explain to people. when it comes to companies. You know what I'm talking about?
Yeah, let's shout out to Andre, by the way. He's a friend of the channel.
Yep.
He's doing these awesome you guys can see this, right? Yeah. He's doing these
Mm-hmm.
awesome recaps of companies when they post earnings. And so he did one for Verizon today.
So what's interesting is, depending on which company you're looking at, you have to look at it with the metric that makes the most sense, right? So one of the things that, Andrej highlighted here was a lot of the revenue, like, oh, their revenue is not growing that much. Their operating income is, down. Net income is kind of down. So like, why would you want to own it? So a lot of people are just like, oh, this doesn't make sense, right? The key here is not to look at that, but instead to look at the free cash flow. Free cash flow is going to make two big things. It gives you optionality to, one, pay your dividend, which is for a company like Verizon, it's why the company trades at the multiples that it trades at. So the dividend has a lot of impact over the share price. That's their entire business model. They charge consumers, they grow their business, and some of that they relate back to the shareholders. So as that free cash flow number grows, it gives them optionality to do things with it. One is pay down debt. One of the chief complaints, and the reason why Verizon is selling where it's selling right now, is because they have a lot of debt on the balance sheet. The key is Verizon is paying down that debt really fast with free cash flow. So as they're cutting back on CapEx, what they're essentially doing is saving that money and instead directing it to their debt. So as the debt gets paid off, it makes the equity more valuable. So if right now you can get an 8.5% return on Verizon by owning the shares, and the interest rates next year drop, what is that going to do? That's going to have two segmented tailwinds for Verizon. Number one, they're going to have to pay less on their existing debt. Most of their debt is fixed, so it's not a big issue, but there is a portion of it that's floating rate. So they can actually use that to pay down that debt, which makes them a better company in terms of investing. The other thing is that free cash flow growth means that they don't have any dividend cuts anywhere lined up. The other thing is their net debt to EBITDA, which I went through in the Patreon, was to explain to people like, hey, listen, as the net debt to EBITDA goes down, that means that additional free cash flow can be channeled towards other things. And one of the things that could be coming for Verizon, because they do generate a ton of cash flow, they could do share buybacks in 2025, not 2024, because I think 2024 they announced it pretty succinctly that they were going to do a lot of debt reduction, and so yeah, they're going to do exceptionally well. So you
go ahead, Carlos.
No, I'm holding.
I was going to say, so Chris, so the reason they did have their best day in 15 years is not because the earnings were that good, but because the stock is like so dead that it kind of has nowhere to go but up on these earnings, is your point.
Well, it's their cash flows, right? Cash flow is the most important thing. Depending on which business you're looking at, that is what gives you the real thing. If you're looking at a company just purely based on EPS, Google is a better thing because you can use EPS as a multiple and figure out what the valuation should be. But for Verizon, it's a whole different ball game, so it's just different ways to value it. That's all.
Not bad at all. There we go. That's Verizon for those that are interested. Putting the link in the chat if anyone wants to join and ask a question live. We will be in Vegas.
By the way, shout out to all my Patreons. They clean house, man. Someone sent me a screenshot, bro. They went in deep on Verizon spreads, and they killed it. So I'm up like 50% on my spreads today. So I'm happy.
You're up 50% on your. Well, yeah, that makes sense. The stock's up 9%, so
Yeah.
Mm-hmm.
Yeah.
All right. So we did Verizon, Bitcoin, Google. Carlos, you want to share something? You want me to share this? You're muted, bro. That's what. Okay, let me share.
Yeah,
there you go.
So this is
Tesla. We got to talk about FSD and Cruise. We got to talk about Cruise. All right, yeah, go ahead.
This is GM. So GM posted their earnings today. Before we go any further, this is GM stock price. Okay, they're down 15% year to date, down 5% today. This is the 1 day. So what did they go down today?
Yeah,
so
apparently the way they released their earnings was Farzad said they didn't say they cooked the books, but the earnings report was very interesting. How they
and I'm looking forward to getting more of a deeper dive on it. But the quarterly financials, I mean, look at them; they're up 25% year over year. Net income is up 51%. Diluted DPS 60%.
Good numbers.
Margin 20. Good numbers, right? But then you have to ask yourself, well, how are these numbers so good? And how are these numbers so good yet the company's doing really bad? Or the stock is doing really bad. So I started just doing a little bit of research. I want to read some of this. With the UAW clash straddling revenue and profits, Chief Exec Mary Barber told investors that the automaker will slow its electric vehicle strategy to put profit ahead of sales targets. So this is the exact strategy that people want Tesla to do, which is not to sell as many units, but increase the profit margins, right? So we're going to get to see which one ends up being better. The problem is with the record growth and the record profits that they made this year, it is now putting the UAW is saying, you see, you're making so much money, you now need to share. They're using this as leverage to basically say, here, it's time the GM workers and the whole working class get their fair share. During a call, Barra called GM's offer a record contract that would allow GM's U.S. factory workers to earn up to $84,000 a year. We will not agree to a contract that isn't responsible to our employees and our shareholders. Their net income fell 7.3% to $3 billion, while revenues grew 5.4% to $44 billion. Where is the thing here? The rising toll of the UAW strikes, the outlook for higher labor costs once a contract is reached, rising warranty expenses, and uncertain macroeconomics have forced GM to abandon its previous targets for the full year financial performance that it had lifted in July. This is one of the reasons why I think the stock is down, because what they're saying is their outlook for higher labor costs. So they're saying at some point they're going to have to make a deal and they're going to have to give up some of these profits to their workers. The problem is if they do this, then they're eating into they're still profitable on the ICE vehicle side, but it's the EV growth that's
and they said they're losing $200 million a week because of these strikes.
Because it's close, yeah, and so
that means in a month they lose $1 billion, basically $1 billion, almost $1 billion.
Right. And if that means that if it goes on for 3 months, they've lost all the money that they made.
They lost all their net income in a month.
Right. They lost all their. Well, no, even less. If they're losing $1 billion. Oh yeah, $1 billion a month, 3 months. But this is interesting. So back in 2020, she made Mary Barra was like famously went on all of the shows and said, we will catch up and surpass Tesla in 2025. And so
I remember that quote.
We're going to pass them. We're going to catch up to them. Tesla's number one. Fine. But I think she's using this as an excuse to walk back their goals, because GM is abandoning the goal of building 400,000 EVs from 2022 to mid-2024. But keep in mind, Tesla sold 500,000 EVs in 2020. So she's still 100,000 EVs less than what Tesla did in 2020. So now this is when we get into the idea that these car companies are 5-7 years behind. You're starting to see it here. So where was it? What do I tell you so far? Oh, and then we get into the second bit of bad news. GM has also said that its losses at its Cruise robo-taxis widened to $732 million. So this is the argument when people say, but GM and Waymo, they're already operating. They're operating at heavy losses. They're not making money on these FSD or these robo-taxi units. The network is incredibly expensive to operate. The amount of technology that you need in order, first of all, to map the areas is capex that they need to expend. Plus, to outfit the vehicles with the sensors costs money too. This is another reason why Tesla's solution just makes so much sense. It actually makes it look easy. I think I tweeted that. So here's what happened today with Cruise. Cruise's driverless car permits suspended in California by the DMV.
Can you explain this? This was very interesting.
Okay, so do you remember when they ran over? Remember when the Cruise car ran over the woman?
Yes.
Okay, so apparently what the DMV is saying, and this is based on Holmar's catalog, that when the DMV found that the video that was given to them was actually doctored when they got it by Cruise. So they cut out a part of the video that showed another part of the accident that would have had the Cruise car more responsible than what it was. And because they did that, they violated a term of their right to operate, which was that for anytime there's a dispute or if there's an issue, they have to fully disclose everything. And so they broke their disclosure clause, and for that they had their permit suspended. And we can read a little bit about it here. The California Department of Motor Vehicles suspended Cruise's autonomous driving permit Tuesday, effectively halting its robotaxi service in San Francisco. The DMV said that Cruise's vehicles aren't safe for public operation, and the company has misrepresented information related to the safety of the technology of the vehicles. Cruise is majority controlled by General Motors, which has invested deeply in the division and is looking to introduce a fully autonomous shuttle called the Origin that doesn't have a steering wheel or manual controls. So when we have our conversation last week about how far away is FSD, it's 10, 15 years away. There are companies that are actively trying to get ahead of this. What I think we're seeing now is this is what happens when you try to cut corners and you don't do the solution that Tesla's doing, which is the car can see the world around it and it operates in the world the same way human beings do. You see everything around you and you respond accordingly. And you understand the rules of the road because you're taught by other drivers, right? The same way. This is what happens when you try to cut those corners and not base it on data, but by like rules based.
So do you think California will have the same response to like an FSD issue eventually when it hits the road? Or
no? Well, the thing is, FSD is already on the road. When we talk about Tesla getting the right to operate a robo-taxi service, that's something different. But I've had this argument or this debate even on Twitter when they say, well, the regulations, we already have the standards. We have level 1 to level 5. We know what those standards are. Or we know what the capabilities are that the vehicles must hit in order for them to be classified as a level 1, 2, 3, 4, 5 vehicle, right? And as long as you have the data that proves that your vehicles and your fleet meets that, then there should not be any regulatory hurdles because they've already decided what those thresholds are in advance. And I actually think those thresholds should be very, very high because you are trusting people with.
But my question is the culture of the government for them to be so against, like, Cruise has to have some experimentation, right? For them to just be like, nope, it's not happening. Is that good for Tesla? You know, I know Tesla's different than Cruise. FSD is totally different.
I mean, I was going back and forth with people on Twitter of whether or not this is good or bad for Tesla. And I think ultimately it's good for Tesla. It's good for the industry as a whole. This is what we talked about, guinea pigs, right? The entire Cruise and Waymo are guinea pigs for what it takes to get an autonomous network off the ground. What is the technology that you really need? And what are the safety concerns that you have to have? And what are the issues that regulators are going to be looking for? So anybody thinking about getting into this right now is going to be looking at this and saying, okay, we can't make the same mistake that Cruise did, right? But I don't think Cruise's vehicle wasn't the problem. It was more the way the company handled the disclosure to the DMV is what I think the issue was. Because they knew that there was an incident, they knew that there was an accident, but I think what the DMV was unhappy with was how they doctored some of the video. Or here, let me share this part.
That's why Dan O'Dowd is also in some controversy as well.
Well, yeah, because he's been pushing, he's been saying forever, why would you get, FSD is nothing compared to Cruise and Waymo, they're the gold standard, and he's got a lot of egg on his face. So here's what it said. Here we go. The NHTSA has also been scrutinizing on-road incidents involving Cruise vehicles, have opened 2 safety defective investigations. Last December, the federal auto safety regulator said that it had opened a probe into 240 driverless cars after receiving reports of the vehicles braking hard or stalling while operating on public roads. You saw that, right? When the network went down and all the Cruise cars were stopped. Okay. The agency said at the time it was aware of 3 crashes, which included 2 injuries. The most recent probe opened last week is focused on reports of Cruise's autonomous vehicles exhibiting risky behavior around pedestrians. This month, a woman was severely injured after she was struck by a vehicle and then landed in the path of a driverless Cruise car, according to video footage taken by Cruise. Rescue workers lifted the car off the woman, who was severely injured. Cruise said it's doing an analysis to identify potential enhancements. This is the incident that I think was the straw that broke the camel's back. So apparently, I'll see if I can find it real quick.
Also, real quick, bro, this is on the Wall Street Journal. Finance Junkies pays for Wall Street. You got to sign in and use our fucking.
Yeah, that's the freelancer finance.
Okay, good.
So that's why I'm not in. Another important statistic here. We can share this. This is important. Here, some investors have questioned how long GM can afford to fund Cruise, given the long path to potential profits, and the automakers need to invest in the electric vehicle transition. So we've seen that they've already decided to lower the guidance and not push the EV development as much as possible because they are dealing with strikes, but they're also losing money on it. GM losses on Cruise widened to $1.9 billion over the first 9 months from about $1.4 billion last year. We do believe in the technology. It's farther safe than human. But there was also something in here. Hold on a minute that I wanted to read. Let me see if I can find this. Just right in. Here it is. So now the company has also joined other automakers in urging the Biden administration to back away from the ambitious emissions and fuel economy rules aimed at pushing EVs to 2/3 of the U.S. vehicle market by 2032. So basically, GM is trying to walk things back to the good old days. So it's a lot harder. Like we've been saying, it's way harder to make a profitable EV at scale, whether you're a startup or whether you are a legacy automaker. We're seeing that it's very difficult for a company like Rivian to become profitable, companies like Lucid to become profitable, and it's also even as difficult, if not more difficult, than companies like GM, Ford, and Stellantis, who also have a dealership network that they have to deal with, and also have to deal with the legacy, their legacy divisions being gutted at the same time, and unions. It's really difficult. All of this is really good for Tesla long term, but the earnings, we said this is gonna tell us what's up. So yeah, the stock might have made a good money this quarter, but I don't know if this might not be like that absolute peak. You know, when they talk about and the adaptation curve is that valley of death.
Mm-hmm.
The valley of death. We might be hitting the valley of death is what I'm thinking. And I think over the
I mean, look, they have automotive strikes. They can't get the fucking regulators on their side. The numbers were great, but I mean, they've definitely got some headwinds they got to figure out.
I mean, I don't know. I look forward to watching. Did Farzad do a video where he talked about how they
I think he did.
Potentially cooking the books.
Yeah, he said on Twitter their income statement just looked weird. It looked very interesting.
Oh, I'd be interested to see. Can you bring that comment up again? If Tesla works better, yes, that is the point. That's the point. That's what Tesla's going for. Eventually, just like the superchargers, and all of them talked about creating their own network, when they saw how difficult that actually is, both capex wise and time, right? In the time that you need a network up and running for you to sell the vehicles to people today. You can't wait for you to build up the charging network. And if you're not making money on your EVs, where's the money coming from to build the charging network? What do? They license it to GM. They licensed it from Tesla. Same deal, I think, is going to happen with FSD. So when we talk about future revenue that's coming into Tesla, right, they are perfecting the technology that they are going to license to all of these other companies if they even want a chance to stay in business at a fraction of the size that they are today. I think all of this is good for Tesla because they're crushing it. So that's all I got for today. Thank you for tuning in to the Victory Lap show.
No, that was a good victory lap. But we got like 2-3 minutes left. One sentence on where you guys think Meta is going tomorrow on earnings. Up or down? How are they going to do? What do you guys think? Meta.
You know how I feel about Meta.
But earnings, you think it's going to be bad, Carlos?
I mean,
$800 billion market cap. It's better than Tesla and Bitcoin right now in terms of
higher market cap. Yeah, I don't know. I actually have a feeling one way or the other. I really I despise that company.
Okay.
So I don't have a feeling. I don't have
KRIS,
a feeling
thoughts on
either way.
Meta tomorrow? Bad numbers, good numbers. You're muted.
You're muted for a while, actually.
I think Meta's going to do okay. I'm not like overly optimistic about it, but I'm not overly negative about it either. I think they're going to really highlight how many pre-orders of their Meta Quest that they had and how many were actually sold and, how many users are using it. Because, I mean, they have to guide for the future, right? So I think they're going to concentrate a lot of their attention on that, and we'll see what happens. But, yeah, I think Meta's okay. I'm not overly bullish and I'm not overly bearish. I will say, just dialing back to the Tesla/GM thing,
if you tell me to buy options on GM, I'm hanging up.
No. GM, I never understood why GM wanted to test these cruise vehicles in one of the most densest parts of the country. Like, why would you do it on city streets? Like, that's retarded. That's like asking for a problem to happen. And you're doing it in fucking California, which is the highest regulated state on this fucking planet. Why would you want to do your EV testing there, your driverless car testing there? The best place to do it would have been a really, really progressive, like in terms of technology, progressive state that has open roads. No,
Austin,
I meant Austin. Austin would have been a much better place to do it. Same thing with something like Iowa or something. There is an unmet need in rural America to have things like FSD. Why not test it there where there's not as many people on the road?
Because I think in San Francisco is where you find a general public that's most open to it because so much of Silicon Valley is from there, right? So you got a general public that's willing to do it. Plus, San Francisco is widely considered some of the toughest streets to navigate because of all the hills and all, so it's a great place to test the technology, and you have the user base there that will actually use it. I think that was the right move. And the weather in California gives you somewhat of a sandbox where you can have predictable weather to test these things in, right? These technologies.
So look at the end result though. You're testing it in a highly regulated state in one of the most difficult areas. No, it's like baby steps. You gotta do it with training wheels first. Do it in a non crowded metro environment. Like there are tier 3 and tier 2 cities that are pretty progressive, like Nashville. Nashville is where I would have tested it,
I would have
people
actually
there.
personally, I would have said Vegas first. I would say Vegas because
Vegas
a lot of
too. Vegas.
Let's be honest. A lot of the taxis and Ubers in Vegas are digital trolleys. They're just taking you from hotel to hotel, going up and down that one street, making a U-turn and going up and down the one street, maybe going to Fremont. And so I think that's the way to do it. People going back and forth from the airport to a hotel, back and forth, back and forth. You can really get a lot of data. The weather is pretty, clean all year round. It doesn't really rain. And so I think it would have been a great place to test it. That's where I think that's one of the spots I think Tesla will.
Yeah. So I don't know. I don't know what the logic was. I mean, maybe you're right. Maybe all the stuff that you said, Carlos, that's the thing that they factored it in. But now they've got egg on their face, and it's going to be really hard to convince regulators in other states to accept something that that they already lied to. Because now you got the stain on your back.
Oh yeah, yeah.
Now you have now you have to prove that you're not a fucking criminal.
Oh
yeah. Whereas before it was like, hey, you guys are actually trying to make the world better and everything else. Now it's like, oh, you guys want to try to skip over that. And so I do think, however, this puts the whole FSD notion back a little bit, even with Tesla, because now Tesla is going to have to go through the same scrutiny, if not more, because of these guys, And so but I'm not saying Tesla can't get over it. I'm not saying Tesla can't get over it, but it's going to be harder because of this thing.
Tesla right now, I believe, correct me if I'm wrong in the chat, every month Tesla accrues the number of miles driven in FSD that Cruise has had since its inception, which is like 2.5 or 2 million miles. I think they're achieving that every month now. So the lead in terms of data is just they're getting away. They're really pulling away.
Right, but it's not so much. It's not so much
data. The data is what's important because that's what trains the AI, especially now.
No, I agree. That's the truth. That what Tesla's FSD advantage could be, that all that training data. But remember, it's all about public perception, right? Right now, public perception is you're a lot more invested in looking at the situation and determining, Tesla is doing a lot more training. To the general public, it's just, robo-car hit people. That's it. And no, I don't want robo-car in my neighborhood hitting people. That's how the general people
I think. You know what?
I mean,
a few years ago, I would have agreed with that assessment, but I think the public in general is educated enough to understand that there's differences. It's like one bad taxi driver is not going to make you not want to get into taxis.
Bro, people don't even know that Tesla's prices are cheaper than ever now. You're giving the general public too much credit. And even the politicians. You remember when in Congress, the politicians were asking Mark Zuckerberg, so how does Facebook make money? You got troglodytes sitting on all sorts.
There you
of
go. There's the word troglodytes.
Bro.
You brought it back.
The last thing you want to do is give these guys enough reason to just scrutinize what you're trying to do. So I mean, that's just what I think. I would have gone a different route. I would have done it just like you said, in something more like a tier 2 or tier 3 city with a use case that makes absolute sense. That's why Tesla did an amazing job of doing the Boring Company tunnels in Vegas. You ever hear anything bad about those things? Never. They're freaking great. We're
gonna get on those. We're gonna use that.
We definitely have to use that.
We're taking a trip in one of those things, and we have to.
No, Carlos. I went there last September. The trip is 2 minutes. It's not anything special. Yeah,
well, just because you did it doesn't mean I can't.
No, bro. Honestly, it's a waste of time and money. It's literally nothing. It's it takes you from here to here in a Tesla. It's not autonomous or anything. There's a driver in there, like a taxi driver.
Yeah, I get it.
Look it up. It's people were like, "This is what did we just pay for?" It's the dumbest thing ever.
Wait, you have to pay for it?
You have to pay for it. You have to pay for a ticket. You have to get in the car, and it just drives you underneath the tunnel. That's it.
What is it?
I'll send you a video of it.
Fine. Okay, fine. And we also have to do the sphere. How many people in the chat? Raise your hand or put an emoji or something if you're going to be there in Vegas this weekend. We've got.
So we will be here in Vegas the 26th.
Are you? So we're not. Are we doing an episode the 26th? You're gone.
Yeah. So 26th Thursday. Kris, you get in at what, 3 p.m.?
I have to double check my flight time.
I think we get in to you and me can hit up the Airbnb. And before we go to dinner, we can do it with Carlos. We can do an episode, and the other guy will be there. He can be in the thing with us, so we can still hit Thursday for an episode. Me and Kris from the Airbnb, Carlos from there.
See what's. Oh yeah, you guys. That'd be cool. That'd be cool. Yeah.
Yeah.
And then you
guys 4 p.m. or 5 p.m.
I am landing. I should be landing at 9:45 local time on Saturday. I'm going to be tired because I would have been working the night before. And so I think I'm going to need to just crash for a couple hours because we have Top Golf that afternoon.
Yeah. And I'm going to try to make Kris do the morning open with me on Friday.
I'm actually landing at 7:40.
You get
Local
to
time?
Vegas 7:40?
Wait,
Yeah, on
7:40
Thursday.
p.m.
Oh yeah, he's not gonna make the podcast then.
Right.
You and me
Okay.
could do it, Carlos.
When
maybe.
do you land in Vegas?
Like 3.
Okay, so you're gonna be there at 3 local time. All right, that's gonna.
Well, I'll be at the Airbnb like by like 5.
That's 3 my time. Yeah, then I'll.
You do know that it's like a different time zone. So it's like, is it West time zone?
Yeah, it's Western.
my
I'm
time
saying
zone.
3 p.m. Western Standard Time. I'll be
Yeah.
there.
So
you'll be
you're
there
gonna
at 3 p.m. Okay, gotcha.
Right. So you're gonna be doing it. You're gonna be doing them at 4, not 7. You're not gonna.
I know, but I have to get to the Airbnb and check in by 4 to make it.
Yeah, but I don't think you'll make it because if you
Yeah,
get
so
there
if not, then yeah,
right
we
at
can do it.
4, you're
Yeah,
not gonna hop
probably
on,
not.
open your computer and do a podcast. So it's just gonna be me. It's just gonna be me that day, just holding it down. I'll be just me
How about
and
this?
Warren
Let's just play it
Puppet
by
in
year.
the chat.
Yeah,
Let's play it by year. See what happens.
Yeah, let's see what happens. No, the only reason is because then there'll be like that Wednesday one would be the last one for the week, and then we got to figure out where and how we're gonna do something. We got to do something either on the. We can't do it on the.
Yeah, I was
Sunday.
thinking from either at someone's
do
hotel
something.
or Saturday, either Saturday or Sunday. We'll definitely do a pod, and we'll get some of the people that are meeting up with us to be live on the pod. So it'll be fun. You guys will definitely get some content from Vegas. It'll be cool.
Yeah,
It's
maybe
super
we'll do a TikTok dance video. We'll just recreate a.
Bro, I was just saying, like last night in the group chat, we were saying, how cool is it that we made this thing? It's grown. Now we're meeting people that are excited because we've kind of built this community, and now we get to meet up with people on the internet that we are friends with. It's just kind of crazy.
I've never done that, so I hope nobody like roofies me.
Yeah, hopefully no one kills us. But no, I vetted most of the people that are everyone that's going, and
that scares me even more. That I'm definitely getting roofied by you. Actually, he's like, I know where you sleep.
I'm
but yes, and any earnings you have to put into Bitcoin for all the trolling. If you make any money,
look, you never told me to buy it, so I don't really.
Yeah, all right.
I'm gonna tell you in person. You never told me to buy Bitcoin.
So yeah, you should sell me on a company called Enphase when you get a second. Let me know how. You should.
We got to do so much in Vegas. We got.
When is Enphase's earning? When is Enphase earning?
Thursday, bro. We're gonna get off the flight and find out if they tank.
What? Yo, the damn. So yeah, this is a crazy week. We'll definitely be talking.
All right, real quick, last question. Meet Kevin's Tesla commercial. You guys liked it or not?
Stupid.
I loved it. I thought it was good. I think you could run that on television, bro. I thought it was.
No. I think Carlos can do. I think Carlos can actually do a way better job of a commercial.
I'm sorry, like that's, and I'm not trying to be like the pompous asshole, but I've worked in marketing and advertising. That looks like a homemade commercial. That's like he's repeating, he's copying the Apple versus PC thing. That's not going to make people buy Teslas. I'm sorry. Like there's a way to sell a Teslas. Did you see that one that the video? God, I don't know. Was it you that posted that, Amit? The one about that car from the 70s?
No, it definitely was.
Hold on, I gotta find this. This is worth it. This is worth it. This is the kind of commercial. Oh, I think it was Farzad, because he was like, you know what? If they're gonna do it, it was like, what would you do if you were like in charge of Tesla's marketing? And he was like, if they're gonna do an ad, it needs to be like off the wall ridiculous. And he posted something that was like this ridiculous ad for a car. Let me see. It was in the 70s, and I was like, damn, they put a lot of money into this thing.
See, I like Kevin's.
I have an idea.
I have an idea.
What's your idea?
Okay, what if Tesla driver pulls up and there's a hooker and she's like, how much? He's like, how much? She gets in, and the entire time, like, he's trying to be like, oh yeah, let's do this. And she's like, wow, I didn't know the Teslas were so comfy. Oh, that's such a big screen, blah, blah, blah. And so at the end, he gives her a referral code.
Oh, I thought you were gonna say, drive a Tesla so you can have your hands free to do other things.
Dude, knowing Elon, he would absolutely
like that. That would be like, okay, there you go. God, where is that? Oh, it must be in my liked video. This is worth it. Hold on, this is worth it. I've got to find this thing. Let me see if I can find it.
I really do think after seeing Meet Kevin's ad, I was like, yo, if they ran an ad that's really good and syndicated it, maybe not Meet Kevin's, but if they syndicated an ad, I'm kind of seeing the argument for why advertising is not.
The thing is, though, but it goes back to Elon Musk's point. It goes back to his point. Advertising a vehicle to someone that can't afford it doesn't do anything.
I agree.
This is why you don't see, by and large, you don't see advertisements for private jets. Yeah. Like, when's the last time you saw an advertisement for a private jet, right? Or like,
yeah, but again, if a Tesla ends up being a private jet, that company's like, it needs to not become a private jet.
It doesn't actually have to be a private jet. It just has to be a private jet to the person that wants to buy it. If your median income, Pennsylvania, is like $56,000, and that's like the average cost of like the mid-level Tesla, you're asking someone to spend their entire yearly income on a car. You can advertise to them all you want. They might want it. They'll love it. They might rent one. but they're never going to be able to. They're never going to be able to actually buy one. So this was the one from today. This is freaking hysterical. And then I think
Wait, ET FaceTime is like Vegas has great fentanyl. What the? What the F?
How would you know? All right,
this is a better one. KRIS
this.
is going to be doing options at the blackjack table, bro.
I am, dude.
Fentanyl, that is
All
crazy.
right, play this.
Bro.
Play this. Play this.
That's wild. I'm trying to hit that up though. No, I'm just kidding. I'm just kidding. I'm just kidding.
So this is what they're saying. When Tesla finally advertises this commercial, better go this hard.
Oh, there you go. Demonetize. Turn the volume.
Just mute it. Yeah, just mute it. Mute it. So there's a car. When Tesla finally that is a hard ass commercial, bro.
That gets flying, and the fighter jet comes in, trying to take it out.
See, but it's not advertising the EV tax credit. Like, it needs to be informational, you know? That's I
yeah, but
think...
you can do like the memes. You can put like the EV tax credit in the smoke from the you know what I mean? Actually, you don't even need to put any of that. All you need to do is have them go to the website. Let the website do everything else. You need to drive the traffic. So that plane couldn't take him out, and he's gonna drop. Those are the EV tax credits right there. There you go. Tax credits everywhere. Come on, this is pretty funny. That you could see a Cybertruck doing that.
100%. Cybertruck is prime for advertising. Like,
you know what
it's a fucking thing.
That's pretty funny.
You know?
Yeah. So I would say, yeah, if they are gonna do it, hey, why not do the biggest, baddest Super Bowl ad, ever, and just say, okay, there's your one ad.
Laura Nicole, there's not a dinner on Saturday, but there is on Friday night. So if you are, hit me up on Twitter or amit@dailypalantir.com. You can email me there. And
this is a buddy calling me about Bitcoin, so I know he's calling me right now. All right, guys, great talking to you. I'll see you guys tomorrow.
We'll see you guys tomorrow. Thank you, everybody. Bye-bye.